Good morning. It is Wednesday, February 28th. It's just after 8:35 in the morning as we start this recording. I'm Mark from Blunhouse Technical Analysis, and we're going to do another live video today of kind of a pre-market overview of some of the stuff we talked about yesterday. What we spoke about was how you can identify ways in which you can see price perhaps moving up or down. And I'm sure you've all heard the term, once you see it, you can't unsee it. Well, this might be one of those examples, and let's hope that it is. What you're looking at now is a daily chart of DXY, which is the US dollar index. And it's currently sitting at about 104.06. Now, what I've shown you here on the right-hand side of your chart, I want you to pay attention to where price kind of finishes its push down and then starts to move higher. Here, here, and here. So you have price moving higher, and you go sideways as opposed to a retracement down. The fact that you moved higher and went sideways as opposed to down in any significant way should tell you that the leg, the move, the market is bullish. So coming out of that sideways move, you move higher again, and lo and behold, what do? You don't have a downward retracement, you actually go sideways again. Now, yes, you have a little impulse down here, but I've identified these areas for a reason, right? So what happens? Boom, we get another leg up and sideways retracement as opposed to down, and another push higher, and then this is really the first retracement down that we've had in any significant way anyways. But do you remember yesterday in our video we talked about there are things that price are always touching. There's always something giving you support somewhere, and sometimes it helps to be able to see what that is. This leg here, this move up, either a little sideways or down, a move up, sideways or down, move up or sideways or down, that is a very atypical buy program, right? That's a bullish wave. When you have an impulse up, retracement sideways or down, and then an impulse up, sideways or down, you're in a bullish pattern. As opposed to down, a little bit of a retracement higher, big move down, slight retracement, big move down. And each time you're moving down, you're taking out the previous wave's lows, typically, right? So that's how you know the market has shifted. But let's take a look at what is price touching. All right, so let's just see if we can find anything. And I obviously have already done this, right? Okay, look, so there's the 20 MA. You get a bounce off a major moving average. You move up higher, you hit it again, and you hit it again. But what else is in this little nest of twisting averages in here? Let's try and find the 50-day. Isn't that interesting? So your first bounce came off the 20, the second one came off the 50 with obviously the support of the 20 in here as well. And guess what happens when you add the 200 to that daily chart? You get another bounce. Now, what is a major moving average? It's a representation of past price and time, right? It's a representation of where trading has happened in the past. And price is attracted to those levels. Like if you're a liquidity trader, you're saying those levels are liquidity. If you're trading off of technicals, you're saying that those levels are attached to the technicals. At the end of the day, it doesn't freaking matter. As long as you can read the chart and monetize the chart, I don't care what the rationale is, and neither should you. Everything is a representation of time and price, momentum, convergence, divergence. They're just measuring different things. But ultimately, these levels represent past price. We talked yesterday about current price revisits past. And that's what's happening here. Now, is there anything else other than, you capture one, you move to the next. You capture that, you move to the next. And ultimately, I think this bounces again and starts to look for this level in here, and ultimately that level of about 106.6. And, give or take some micro cents along the way. But you can see how price respected each one of those levels. Now, if I add two quick things, this is a stochastic RSI and this is a MACD. And I didn't do anything to adjust the settings on these. They came right out of the box from TradingView. Now, what you notice here, again, are you trying to find ways to see which way the market's going to go? Sure. Look what happens to our stochastic RSI here. This is what we'd be looking at. You'd be looking at that big impulse candle down in a very oversold stochastic RSI and a very oversold MACD that appears to be at the beginning stages of moving higher. Now, we know that the stochastic can drag at the bottom of the ocean for a very long time. We know that, but look what happens. So there's your momentum in the market moving higher. You know that when you get to the 20, it would be a logical place for a price to take a pause or even find a rejection. And it does take a little pause for a few days and then moves higher. Now what happens in here at the second leg up? So we had the first one, and now we're at the second. You notice our MACD moving average and signal line on the bottom right hand side. I hope you can see that. It broke zero on the way up. Right, so as soon as it starts to get onto the north side of zero, there's a little more bullishness attached to it, and there's more likelihood, or the probability of price moving higher also increases. But also pay attention to the indicator above, the stochastic RXI, where it moves down, points out, and then shoots up. You have %D crossing through %K and all that stuff, but that's a whole other conversation. But when you see that, that's kind of an indication that you might be getting a snapback. And when you look at your MACD, which has broken the 0% line and started arcing higher, again, there's some bullishness to the market and price moves higher. Where does it find? And this is really the first time that it actually retraced down. Most of the retracements have just been simple sideways moves, and then they catch some support and they push higher again. This one comes back to the 200. And then I think we're bouncing here. And look at our stochastic RSI is incredibly oversold, and it's crossed and pinching higher. Again, we don't trade every single little cross, but this one looks like it might have some velocity to it. And the moving average and signal line is not breaking, at least at this point, the 0% line, and is arcing higher. And yesterday we talked about how when that moving average and signal line is above zero, it's an indication of positive sentiment. Now, so we show this on one chart, but you're probably saying to yourself, well, is it applicable to other charts? Well, I think it is. Let's see. Here's a chart for Bitcoin. As all I've done on this chart is identified here this very flat trading, which is simple consolidation, right? Those are buyers and sellers shaking hands and agreeing on a price in a very narrow range, and coming out of those situations is typically a significant move higher or a significant move lower. And it looks like, from what we see here, that this one was higher, obviously. One of the things I talk about in our Telegram group, and this is why you'll always see, or not always, but quite often, the 20, 50, and 200-day moving averages on my chart, is because when you have consolidated price that is significant enough and long enough that it brings all of these averages together and tightens them, and they start to twist, the moves coming out of there with all three of those are usually significant. Sometimes you'll see them on your chart with two of them, but when you can get all three of them together, usually something big happens. And we talk in the chat all the time about how I like to buy off the 50-day moving average or the 20-day moving average. Right? This is a great example of that, because coming out of this consolidation in here, you have price along the lower left-hand side. You'll see it just basing along the 50-day, and then all of a sudden you get this candle in here, which basically breaches all three of them at the same time. That, again, is a bullish indication in the market. And then just price starts moving higher. right? Find some support along the 20-day here. Here again, we do break down, right? And you can see how overbought the market got. Had a little retracement, not a significant retracement though. And if we were to throw Fibonacci's on here, which we'll do another time, you would understand what I'm talking about. The retracement isn't all that big, and it bases out. And then you can just, this is why we use other indicators to validate what's going on in the market. But you can see coming out of here that this move was quite explosive, right? And at the same time, you get your moving average and signal line on your MACD. Although it did pull it below zero here, you can see what happens when it regains that bullish sentiment. Price is always finding support or resistance on something. Past price, there'll be a major moving average, there will be something. And here, similar situation, right, where price moves up, but it goes sideways, doesn't pull back from here, moves up, goes sideways, and then moves up again. I think this is the $64,000 question, no pun intended. What happens after here? So understand so you can see where you get the support, but understand when when you go parabolic like this, the retraces can be and feel violent because you've spread out all of these ranges, and price will look for those comforting levels again. And if the move up was high or an impulsive, the move down can often feel the same way. And that's why we talked about the volume profile, because it's going to show us areas of, this is on the daily, so where you see these big holes, those are gaps, and price can fall into those gaps with some velocity, and those are the things that you should be keeping an eye on. These are the volume shelves. These are the areas where it will find or has found some support, and you can see them. And on the retraces back, the same, you can expect the same on the way down. These shelves in this past price will become important. If price breaks them with velocity, that's a signal that there's some heavy selling on the way down. So that gives you an idea, just quickly, on how you can start to identify patterns in price and start to think about, set yourself some targets on where price might be going, right? I'm indifferent to price. I don't care if Bitcoin goes to $1 million or 1 cent. It makes no difference to me. Because as a trader, I have one job, and that one job is to monetize the chart. It doesn't care about what I think. So my job is to just do this, right? And maybe that's the difference between a trader and an investor, a little bit, right? But as a trader, these are the types of moves that I'm looking for. Now, here's the one thing I want you to understand, and this is why understanding price on the chart is important. This is the language of the market. It's a real-time representation of what money is doing and not what people are saying. The narrative on the US dollar is the dollar's dead, the dollar is garbage, it's not worth the paper it's printed on, and Bitcoin is the future. Sell all your US dollars. I don't know. Maybe that's true. Maybe it's not. At the end of the day, I don't care. All that matters to me is what's happening on the chart. And this chart says that the US dollar has been moving, is and has been moving higher, while Bitcoin was doing the same. So the narrative is irrelevant. The only thing that matters is price on a chart. So I think what we're going to do maybe later on in the day is we're going to take another look at how you can find a real simple way to enter and exit trades. And that'll be our next video, and hopefully I will be able to do that later on today for you. So happy trading, find safe, profitable trades, and remember, technical analysis is the language of the market. We'll talk to you later. Bye-bye.